Generac Holdings, ticker GNRC, seems to be trading at a decent value right now. We're coming up with a fair value around 140.57, current value of 117.14, discounted cash flow of 166.87. So clearly those cash flows are pretty good, and it's one of the bigger drivers for the valuation here. And that's a very important metric for a company. Earnings do seem to be a bit low for the valuation that it's trading at. Nothing too extreme, but the PE ratio on this stock bounces around quite a bit. We see that it was in the 40s in the 2020s, 2020, 2021, dropped down to 18 in 2022, back up to almost 40 in 2023, and back down, currently sitting at 18.59 on the expectations for this year. So over the time frame, the average is 34.63, but we're just going to go with 30, kind of in between the lows of 20 and the highs of 40, and see what that gives us. Clearly it's helped out down here, and we'll get down to there later. Cash flow yield right around 10%. That's what we like to see. It's a bit higher than it has been on average, so that is a good sign. They do not pay a dividend. ROE 8.68, ROI 8.27, ROA is pretty low at 4%. ROE, ROI are okay. The debt does look a little high. Nothing too crazy. We just need to make sure that they are shrinking, or they're growing their assets faster than their liabilities, at least. Not more recently, but in the longer term they have been. So that is something to keep an eye on there. Margins, they were a bit below average this last year, 34 compared to 35.5 typical, net 5 compared to 10. So they do have some room to get those margins back up. Revenue seems to be slowing down. Analysts are projecting it to pick back up though, 4.41% in the next year, and then 6.82 over the next 2 years. EPS growth, it had been shrinking, and it's projected to jump quite a bit. They've had earnings in the $8 range before, which is what's expected in 2025. This year, 630 is expected. They've been in the fives before, 555 in 2022, 561 in 2020. They were pretty low this last year, 2023, which helps to explain why the stock price is currently down at the point that it is. It's gone as low as $80, but this is a stock that at some points in time has traded $352 in 2021. So it's at a massive discount from that point. Cash flows seems to be a similar story, and they're starting to grow it again. If they're going to be growing their revenue, we'd be looking at the cash flows growing as well, but not to the same degree. The share count, they have been consistently buying back 1.5% to 2% of shares. Asset growth has slowed down, and liability growth has slowed down as well. But if we use this for our thesis, this would end up in 5 years, them having a cash flow yield of 8.9%. So in fact, they might even be able to do higher than that. But this is more of a low level estimate. Nothing on here is too crazy. Maybe the 17% margin is, but that only brings them to 11% over the next 5 years, and 10.26 is what we've seen previously. So if we do say that that is a little excessive, take that down 15, back on average in 5 years, you're still looking at outperformance of the market on the 3 and the 5 year basis in earnings, in growth of the fair value of your shares. Now, the average return per year is only 6.55. So essentially in line with markets, maybe a little low. You're getting a lot of your value off of just the undervalued shares that the undervalued share price that you'd be getting at today. We can take a quick look at some of these trends. Revenue looks pretty good, definitely an outlier in 2022. COGS following a very similar trend there. The EBITDA jumped in 2021 and it's gone down since then. Same goes for the net profit. So clearly that was a lower expense year in 2021. A balance sheet, we do see a nice trend in the assets. They do have some tangible assets, not much though. And then liabilities, we're seeing a pretty similar trend, much flatter it seems. And they do have somewhat of a tangible book value. It is growing. It did go negative in 2021, and it's trending positive at the moment. Cash flows, I mean, not much of a trend here. $400 million seems to be kind of a cap for what we're looking at here. 2022, they did go negative, and this is not a dividend paying stock. And then we have everything graphed out so you can see how incredibly straight lined almost everything seems. The balance sheet doesn't really have any crazy ups and downs. The fair value kind of does, but since 2022, it's just been on a straight line upwards, and the earnings have kind of wobbled around a little bit as well. But since 2023 or going forward, they're expected to be on a nice little trend there. This is a pretty conservative case for the stock as well. So I definitely feel like it's at a reasonable price to be purchasing, and they do have some growth potential for them. It looks like at the low end, you can expect market returns, and if they can outperform, then you'd be looking at some even better returns from there. So I want to thank you guys for watching. Please like if you enjoyed the video, comment what other stocks we should take a look at, and subscribe so you can stay up to date with everything. And I'll catch you next time.